Hello, this is Dr. Paul Cottrell, and I'm recording this on June 19th, 2023. I'm going to be talking about the ETF SPY. This is the ETF to invest in the S&P 500. As I've been saying in a few videos, that there's a buy signal, a very bullish signal in the equity market for the United States. I'm going to use this video to explain in detail why I say this. So for the ones that don't know trading charts, I'll explain the complexity here. Down at the very bottom, here is the volume. This is the number of shares being traded for any particular time period. All right. And up at the top is the price over time. Right. And this is a day chart. So each candle here is a day. And this chart goes all the way back. This screen goes all the way back to 2018, but the fib sequences go all the way back to 2015. So what's a fib sequence? A fib sequence is a Fibonacci. A Fibonacci is basically you take the price range from lowest to highest, and you build a sequence off. You build these retracement lines. And in a Fibonacci, you have like a 23% retracement, a 38% retracement, a 50% retracement, a 61% retracement, a 78% retracement, 100% retracement. And if you get really complicated, you can go, plus or negative of, of a main fib sequence, but I'm not doing that here. So what I did was I built two fib sequences. And when two fib sequences come very close together, as we see here, we have a fib sequence here and we have a fib sequence here. This fib sequence here started at the very bottom of the crisis that was happening in 2020, right? And then there was the big tick up, and then we had the bear market. And then now we're getting out of the bear market and we're getting into a buy signal here. Well, why is it a buy signal? What was going on here? So this fib sequence, this smaller fib sequence, is from the COVID crash to the highest point for the S&P 500. This fib sequence is from the highest point to the lowest point in the 2015, going all the way back, which this screenshot isn't showing, but this goes all the way back to the bottom of the 2015 correction. So the reason why this works is people work in behavior when they invest or when they trade. There's a behavioral side to this, and people have different time periods of getting out of the market or going into the market. So 2015 is a big one, right, because of the correction. And obviously, the crisis that we had in 2020 was also a big behavioral shift. So taking the 2015 and taking the COVID fib sequence, you see that they overlap very closely. So you can see that the 23% retracement is close in relative terms from the 2015 to the COVID one. Same thing with the 38% retracement. And then the 50% retracement starts to get, starts to spread out a little bit. And the 61% spreads out a little bit more. And then obviously the 78. So these 23, 38, and 50 are really important factors to recognize. All right. Now, if we go and look at the dynamics of the bear market right after the market top that was happening, near the end or the very beginning of 2021, the very end of 2020 or the very beginning of 2021, this bear market went up and down, up and down, up and down. Very different than this dynamic here where it was the big correction. from COVID, and then, the mean reversion. So this is what they call a V recovery, and this is called a U recovery. We had a V recovery also with the 2015 market. So we had some volatility that was going up and down for a year, right? And what is interesting is you take a look at some of the support levels or resistance levels. So as it's going down, as they were touching off the 23% retracement or the 38% retracement, these would be support levels. And you can see that we had serious support level as the bear market was starting to take hold on the 23% retracement of the COVID fib sequence and the 23% retracement of the 2015. And you can prove that out by it went back up once it touched that support level. And then it went back down, broke the support level, and tested the next support level. Well, the next support level would be the 38% retracement. All right. And when that hit, then it mean reverted a little bit back up. And it was testing a floor, not the floor, but the ceiling of the 28. Once you break a support level, it can become a resistance level later down the road. So as it was bouncing off of the 38% retracement, the 23% retracement for the COVID fib sequence ends up being a ceiling. And if it didn't break that, then that's a very bearish sign. Bam! Because it didn't break that resistance level. You can see that there's a gap, what's called gapping. This gap here of the candles is a very bearish sign. So bam, it broke through and tested the 38% retracement of the 2015. All right. And then it rallied decently and was able to break the previous the 23% retracement resistance levels on both the 2019, the COVID fib sequence and the 2015 fib sequence, but couldn't maintain it, and then test again the next level, broke through the 38% retracements, and then started testing the 50% retracement level of the COVID fib sequence. Once it touched that, and you got to remember, when it comes to equities, usually it's going up. So if it hits as it hits the 50 or 61% retracement, those are very, very, very good signs to realize that your market, assuming your fib sequence is large enough, the market that you're trading, if it's in equities, most likely, especially in the macro level, most likely is going to go up if it touches off of these 61 or 50% retracements. So that's exactly what happened here. It touched off of the 50% retracement of the COVID fib sequence and started rallying. And this is the reason why I've been saying for part of last year and all of this year that the floor of the S&P 500 is 3,470 if you're looking at the S&P 500 index, and for SPY, because this is the ETF for the S&P 500, 347. And I said a big resistance level is going to be at around the 420 mark. If it breaks, then it's going to be a very bullish sign. And as you can see, as it bounced off of the 50% retracement from the COVID fib sequence and started rallying, what did it do? It tried to, it went through with a little bit of difficulty, but broke through the 38% retracement, had difficulty at the 23% retracement, for the 2015 fib sequence, right? And you got to remember, larger fib sequences are stronger than shorter fib sequences. And it went back down, was supported by its 38% retracement of the COVID fib sequence, and then bounced back up and was able to touch off, but not break the 420 barrier that I was saying. So when I was saying that this is a, at that time I was saying, okay, it's gonna be in a range, so it will break out if it breaks 420, meaning go up, and a very strong support level is the 450 mark. I'm sorry, the three. Let me repeat that. The large resistance is 420, and a big support level is 347. But even if during this time period, because at this time we started having the banking problems with SVB, I also said that you could drop down that 50% retracement from the COVID fib sequence, go down to the 50% retracement of the 2015, and that's even a stronger support level, and that's the 330. So I was saying that earlier in the year that the 330 and the 347 are very, very strong support levels, and not to worry too much, and to kind of trickle in money throughout the year. We didn't know if it was going to go up or down, but at least we knew kind of like support levels, where the ranges could be. But because there was energy being built up right on the 23% retracement of the 2015 fib sequence and broke through the 23 fib sequence on multiple trading days, this is a very bullish signal. Now, it doesn't mean that every trading day we're going to have an up candle, a green candle. There are going to be a few days where we're going to have red candles, right? But this is going to start to oscillate, but average is going to be going up. And by the end of the year, if not earlier, we're going to test the high, and it might go down. So there'll be like it might go bounce off of the 480 mark, and then gain a little bit of energy, and then come back and break it. So it'll test it. It might go down a little bit within a certain range, 480 to 480 to maybe 450 or something, and then it'll start to gain some more energy within the system, and then break through that 480 barrier. So individuals that have been putting money in at the very beginning of the year, like I've been saying, just trickle it in a little bit at a time, will fare good if they don't add any more money. But if they still have cash on hand, it probably makes a lot of sense for you to invest your funds in whatever vehicle that you have. I'm talking about this in the S&P 500, but if you have a 401k, or if you trade your account more actively on a brokerage account, either like TD Ameritrade or Fidelity or Interactive Broker or whatever you use, and you have cash on hand, it may make sense to go all in now. What I did was I've been trickling in money from the beginning of the year. So I've been, accumulating positions around here. And then I went all in once I saw multiple days above the 420 being the big buy. Again, this isn't going to be, a rocket upward. Because you can kind of see here, things kind of undulate, but it moves in a steady fashion. So I suspect that we're going to see something. You're going to see it go down a little bit and then go up and go down a little bit and then go up, but it's going to test this and then it'll go down a little bit. Maybe I'll go all the way back down to 450 and then test it again and then break the 480. That's my guess on this. So, you know, if you follow what I've been saying at the very beginning of the year and you start putting some money in around here, and even if you start to deploy additional funds now, then you're going to make a decent return in 6 months. So, you know, I've been pretty accurate on this chart here, this dynamic of the COVID and the 2015 fib sequence. Then what's going to be interesting is you take this and then you would build up a new fib sequence. You know, you take this and then you take it to the high point and then you can extrapolate and go, well, if it goes up 23% more than, you know, from this new fib sequence that would be drawn, then potentially there's a little bit of a downturn. But right now, I would say that there's a good chance of testing the market high and surpassing it by the end of the year. So hopefully you learned something, a little bit more detail on why I was saying that the support level, the major support levels for the S&P 500 is 330. The 330 is the 50% retracement from the 2015 fib sequence. And the 347 was the 50% retracement off of the COVID fib sequence. And why I was saying that that around the 420 mark was a major resistance level, and if that breaks, then you will be able to say this is now a bull market. So really, the bull market technically starts if this maintains itself. The new bull market will have started in 2021 at, you know, in the fourth quarter, the beginning of the fourth quarter of 2021. But it wasn't really, it was hard to see it because you wouldn't know if it would continue to go down. That's why I kept on saying, you know, 347 and 333 are very strong support levels, and that's the 347 held on, and it's right on the 50% retracement. And you got to remember, none of this would have been known. All you have to do is just as the market is starting to correct, you just build the fib sequence from the short to the high, and you automatically get these retracement levels. So as this thing's developing, you have this line here waiting for it to be tested. It did test, it went back up, and then failed again. You know, so then, you know, when it failed and broke through that 23% retracement, that was the signal. You know what? That's definitely a sustained bear market instead of a V recovery. See, the V recovery would have been down, bounce off the 23% retracement or even farther down, and then start to go back up. But it failed relatively quickly, and you know, continue to fail. And this volatility was, you know, in some days where it's in the high 20s and 30s, low 30s. But now the VIX is at 14, 13, you know, around here. Well, with a low VIX index, it's going to be, market's going to rally. Now, usually what happens is 2 to 3 months, there's a big spike in VIX and then it drops back down pretty quickly. So, you know, in about, I don't know, I'd have to take a look at the VIX, but I'll do another video on that. But I suspect probably in about a month and a half or 2 months from now, it starts to potentially see a spike. But I think that by the end of the year, we have tested and perhaps surpassed the S&P 500 high. But, you know, again, this is not going to go up every day. There's going to be some undulations, and some undulations are going to be, you know, more like here than other undulations. But this is a very strong buy, and there's been an awful lot of institutional investors that have a lot of cash on hand, and they're going to deploy this. This is a very strong buy signal. So hopefully you learned something. Please support my work by going to my different links that are in the video here. Please subscribe to my 3 channels on YouTube. Subscribe to my Brighteon, Rumble, and Bitchute channels. And also, if you could, please help support my work by being a Patreon subscriber for a nominal fee. And if you can, especially the ones that are overseas who can't buy my health products, please go to the-studio-reykjavik.com and you can donate on my homepage at the very bottom. You can donate through Stripe or PayPal, or you can click the other link that's in this video for Buy Me a Coffee to help support my work by donation. For the ones that can purchase the products that live in the United States, please go to my store, the-studio-reykjavik.com. That is the-studio-reykjavik.com. All the links are in the description of all my videos. And please go to the store, take a look at the products that I offer. I sell nano silver, liquids and gels, soaps and lozenges. I sell Boomer products. I have a plethora of supplements through them. I also sell a multivitamin. I also sell a nano silver toothpaste. It doesn't have any fluoride in it. It is the best toothpaste that you'll purchase. It will whiten your teeth, freshen your breath, neutralize pathogens, and increase your cardiovascular health. Now, in terms of the Boomer products, I have a lot of different supplements to offer. B complex, probiotics, digestive enzymes, lignans, collagen, vitamin C, zinc, magnesium, D3, resveratrol. So try out those products. I have a clarity factor, which is great for studying or concentrating for work. I have a good night formula, which will help you sleep at night and improve your memory. And these products, if taken on a regular basis, you'll notice your health will improve and you will slow down your aging. This is there's a lot of new science that is starting to get published showing and proving the points I've been making and the things that I've been doing since I've been 16 years old. So, I am a firm believer in the idea of an anti-aging protocol, proper diet and exercise, proper nutrition, proper supplementation, proper sleep. So please take a look at those products. And then additionally, I have C60. C60 is a very strong antioxidant. That is a supplement that will neutralize oxygen species that are charged. And those reactive oxygen species causes cellular damage. That's why you need to take C60 to soak up those free radicals that cause damage to the cell and reduce the efficiency of the mitochondria. So when you're taking the C60, your energy will improve because your mitochondrial health will improve, your ATP will increase, and you'll have less cellular stress. So these cells will work better. It's a very strong antioxidant because of the molecular structure. And if you take it regularly, you'll notice that you'll reduce your free radicals. And when you do that, you actually age slower. In addition, I have all natural deodorants that are in citrus and in peppermint tea tree. So please take a look at the all natural deodorants on my store. And, if you follow my protocols, you on a regular basis, you're going to start seeing many improvements for your health. Now, if you're a little confused on how to start, take a look at some of the anti-aging boxes that I offer. I offer them at different price points. If you can't afford a full box, maybe you can just, buy individual items, but, at least you have an idea as a template on what you need to get to, move into the direction of an anti-aging protocol. Everyone's different, but, there are some, common themes when it comes to anti-aging. And that is neutralize pathogens through the nanosilvers, reduce inflammation through items that are like turmeric and ashwagandha, control your glucose levels with ashwagandha, get rid of senescent cells with the resveratrols, obviously take your vitamin C's and your zincs and magnesium and your D3s, which are really important. Make sure you get, a good supplement like Clarity Factor to reduce brain fog, a good supplement for proper sleep to make sure that you're getting, the proper REM cycles that you need to consolidate memory and to be rejuvenated. And there's a lot of science out there that's, saying that if you don't get proper sleep, your cells can't really detox. So a lot of the healing that's taking place is during your sleep cycle. So my good night formula, will get you into that proper phase that you need for sleep. And obviously, a good toothpaste really helps a lot. And then a very strong antioxidant like C60. Those things that I mentioned are everything I offer is very high quality. But the things that I mentioned it's a great way to start. Maybe you can't afford everything, but if you, chip away at it a little bit a little bit here, a little bit there, then you're going to start seeing improvements on your health. So thank you for listening, and thank you for supporting my work, and have a nice day.